What's the magic behind Apple? Is it just a sleek design and clever marketing? Or is there something deeper, more fundamental, driving this tech titan? This is episode 1 of the S&P 500 Fundamental Analysis series by Science of Stocks. And today we're peeling back the layers of Apple Incorporated, focusing on two crucial metrics, but also taking a holistic, fundamental approach to really understand what the value of the stock is. Will determine if this company is truly worthy of the price that it has right now and the title as the world's largest company. Buckle up because we're about to unlock some secrets behind the Apple stock price. Apple isn't just another tech company. They're the masterminds behind the gadgets that have revolutionized our lives, from the sleek iPhones we can't live without to the powerful Macs that fuel our creativity. Apple's innovative spirit has taken the world by storm. And let's not forget the iconic Apple Watches and AirPods that have become synonymous with style, status, and technology. They are in the technology sector and the consumer electronics industry. A look at Apple's financials shows us some impressive numbers from the tech giant. Their total revenue for 2024 is $391 billion. Their net income from that, $93 billion. Total debt outstanding, $119 billion, with a free cash flow of $108 billion, leaving them with a debt to equity ratio of 2.09%, a little on the high side. A look at these charts shows us a general trend moving in the upward direction, but with revenue stalling out in the recent years. While paying down debt and increasing free cash flow, along with a decreasing net income, there are some interesting things to consider here. Apple is definitely valued very highly, but is it all justified? A quick look at the chart here says maybe not. As Apple's revenue has stalled in the near term, their price for their stock has been skyrocketing. We see here on the bottom half of this chart significant PE ratio expansion, which has not been backed up by any of the underlying fundamentals. With an S&P 500 weight of 7.62% as of January 1st of 25, analysts aren't expecting much price appreciation. In fact, their current targets imply the stock going down a little bit this year. It is true that Apple seems priced for perfection and then some, being potentially overvalued. So, as we wrap up our deep dive into Apple's fundamentals, it's important to remember one thing. Even giants can fall, and when you're on the top, everyone's gunning for you. Competitors are constantly trying to innovate and steal market share. New technologies emerge disrupting the status quo, and regulators are always lurking, ready to challenge the dominance of established players. Apple has a history of resilience, but they can't afford to rest on their laurels, especially with the inflated price that they currently have. The future of any company is uncertain, but especially Apple. By understanding their strengths and weaknesses and the challenges they face, we can make more informed decisions about our investments. What do you think lies ahead for Apple? Share your predictions in the comments below and follow for the rest of the series. Up next, we're talking about Tesla. This is for informational purposes only and not financial advice.